Hey, welcome everybody to another #Real Talk podcast. This is where we deal with real issues for real people who are looking for real solutions. But the bonus is every week, especially on a Monday, we have a GenInvest takeover where we focus on property investing to help all of you to move away from being a consumer to becoming an investor. That's our real desire. And obviously every week we bring in David Muir from Connect Properties. Say hello, Dave.
Hello. Welcome. I'm glad to be back.
He's back. Okay, and we're going to be focusing today's podcast on how you actually get into property investing in terms of the finance side. So Dave, who is an expert from Connect Properties, tell them a little bit about your background in case they haven't seen any of the podcast.
My background is I have been a mortgage advisor for a few years. I'm 11 years in lettings, so I've been dealing with investors, dealing with properties, dealing with the problems you have as a landlord. The biggest one you have is funding your first one. That's
Funding
the biggest
one. Funding the first one.
Yeah. After that, you're as good as anybody else.
Okay, so we're going to get past all the myths that potentially are out there that you may have, and give you the realities of what it takes to get into property investing. So some of the things that we're going to be recording today, it's going to be talking about residential mortgages.
Talking about mortgages in general.
Yeah. When
they started, how they progressed, and when buy-to-let mortgages came in, so that ordinary people, not institutions.
Ordinary. Who's ordinary? Am I ordinary?
We're all ordinary.
Ordinary.
Anybody who's not a corporate, a pension fund, things like that.
Yeah.
The normal people that you can see walking in the street, they can all have a mortgage, buy-to-let mortgage, to get a property and invest in it and become an investor.
Excellent.
Yeah,
so we're going to
go. What we're going to talk about.
Excellent. So listen. So make sure, obviously, you continue to follow for the whole video, because I think all of the bits that Dave is going to cover today are going to be vital for your property journey. So come follow us, and we'll take you through the buy-to-let mortgages, and also I think you're going to be talking about bridging today as well, aren't we?
Yes. Now that's a more specialised subject. Quite scary, but we'll talk on it because it's only used in certain circumstances.
I've never actually done it, so I'll be learning from you, because he has.
So I've done it. Not completed it because I had a good mortgage broker who beat them on timescale.
Brilliant.
But we'll talk about that later on.
Excellent. Let's go then.
Right. We spoke earlier about mortgages, and just to give you a brief history, originally they've been around since the 12th century, longer than I have. But
never, Dave.
Definitely. But in the 70s, you wanted a mortgage, you went to a building society, like the Nationwide, Abbey, and those sort of places. Going up to the 90s, the banks started taking over the building societies and they started entering the market. Well, in 1996, which is the period we're really interested in, buy-to-let mortgages was available for investors. Now, everybody thought an investor was somebody that was filthy rich and a megalomaniac.
People still think that, Dave.
I know.
People still think that, yeah.
But realistically, there's more landlords out there now that own one property than there is those that own multiple properties.
Yeah.
So, accidental.
Yeah.
Your parents die. You end up with a property. You don't want to sell it. Sentimental reasons. You want to keep it. And then also the other people.
Yeah.
We have a generation called Generation Rent. There's no jobs for life now, so you rent, so you can move, go where the work is without having to be tied down. But there's nothing stopping you buying a house and renting it out and gaining the equity in that property for when you want to buy your own property.
Yeah.
So just don't think just because you rent, you can't buy.
Brilliant.
You can. So that's what we're going to take you on the journey. The next place we're going to show you is a bank. They have their niche. And then we'll show you other ways of how you can broaden your market of finding a mortgage that suits you.
Yeah. So there's a question. What is the main differences then? So if I'm looking at a buy-to-let mortgage, and I go to a bank and I go to a building society, is there anything favourable with a building society that you think?
Banks and building societies offer their own products.
Yeah.
So you go to them, you either fit them or you don't. So you get one choice. You may get different rates, you may get programs, and that. If you go to a mortgage broker who could be attached to a building, an estate agent, right? They will have a panel of people you can go to, so they can find a mortgage that's probably more suited, or you can go to a specialist mortgage broker who will be whole of market, and anything that's available that he can get hold of, he can find for you. So there's more choice, different products, different time levels, different criteria.
So there's nothing major then that a building size is going to give you over a bank at the moment then?
No.
So their rates are going to be somewhat similar?
Well, considering that Abbey owns was a building society, is now
Yeah.
a bank. Nationwide is belonging to a bank. Yeah,
So it's all
they're
just
all the same.
rebranding, aren't they?
Yeah, they're
It's
just
a
rebranding
thing. Oh,
Yeah.
okay.
It's just how people's mindset is. You might feel more comfortable going to a building society
Yeah.
than a bank.
Oh, okay.
You know, it's how you feel.
Okay, so one of the areas that we've looked at so far then is that you can get a buy-to-let mortgage from a building society.
Yep.
We're going to have a look at a bank
Yeah.
and things like that. And we'll say the pros and cons at the end of all this. What are the key pros and cons
Yeah.
that
What you need to look
summarise?
out for, what you need to be aware of, and the costs that are involved, and the
Excellent.
timescales.
That's important. Timescales is really, in property investing, timescales. We've lost deals because we haven't been able to move quick
Yeah.
enough. Very good deals. And usually, I'll just say this as a caveat, the best deals are usually for those or reserved for those who can move quickly.
Yeah.
And you have to be very mindful. These organisations, David, you can tell me if I'm wrong here, like a Nationwide or building societies, don't move as quickly as some of the other
They have
providers.
their own processes.
Yeah.
They just have a mindset. If you go to a specialist broker and you tell him you need it in time.
Yeah.
I did it the other week. I went to my broker and said, look, I've got 28 days to complete this deal, otherwise I've got a massive penalty. Find me a mortgage. I got it through in 8 days. I'm
Perfect.
completing on Wednesday.
We'll be
Yeah.
showing that property as well, so
And we'll go
make
through
sure
that.
you subscribe because
Yeah.
you will see this deal.
You'll see the property, see what I bought. You'll
Yeah.
see how I operate. You know, it's not all talk, it's action as well, which is what you need to do.
Okay.
You need to do action.
Excellent. So, look, we've seen the Nationwide. Now we're going to go down to either Santander or Lloyd's. We don't know which one yet.
We'll go to Lloyd's because that's the bank. Half the people you see in this high street could become potential landlords with our help. Instead of taking the money out of the cash machine, you could be putting money in your bank. How would that feel? Make a nice change.
Dave, do you want to tell us about obviously going and
Yeah.
talk to mortgage brokers and where you can find them and things like that again?
Right, we spoke about banks and building societies, not a lot of difference. Single product usually. If you want more advice, you go somewhere that's easy accessible, and one of the easy accessible places are your estate agents. They'll have mortgage advisors in.
Yeah.
You know, they'll offer you more choice. It's an easy way. You can do your homework, you can go and ask them. They'll answer questions for you because they're hoping you'll come back and do business.
Perfect.
So you can get free advice from them, what's available. You don't have to buy, just take an appointment. You know, at some point you're going to probably go to an estate agent to ask if you can view a property. They may ask you to go and talk to their mortgage advisor.
Yeah. A lot of times they will.
Yeah, don't get frightened of it.
Yeah.
Just don't commit. You know,
And the thing is, interview them.
interview.
You know, go and see different people and you'll get a gut feeling like if anything.
We will help you we'll probably do a
Yeah.
podcast on how to talk about what information you need from them,
Yeah.
what information they need from you. It'll only be a small podcast. It won't be an hour. It'll probably be about 5-10 minutes.
Yeah.
But it'll be worth listening to because
Excellent.
it'll make you feel comfortable when you go in. You know, it doesn't have to be like when you go and see the mother-in-law. You know,
Not
it
gonna be that
doesn't have to be frightened. It can be nice, easy. They're not ogres.
Yeah.
You know.
So obviously if you're looking to obviously get the finance, speak to a broker, they can tell you how much you need, how much deposit you're looking for,
Yeah.
and things like that, what type of rates, what type of interest you pay,
Yeah.
and things like that. So
And
it's really important to get
they'll
into
ask
that.
you questions about your circumstances,
Yeah.
and they'll find the right mortgage lender that will fit you and the criteria you're looking for. That's the most
Brilliant.
important thing. Welcome back. We said we'd talk about bridging loans, and it doesn't have to be stressful. That's why we come to a coffee shop just to relax.
Relaxed. I'm enjoying
And
my hot
have-
chocolate.
yeah.
Actually. How's your drink?
Yeah, I've got a coffee. Our cameraman, he's got
Oh, it's
banana and mango
sugar
smoothie.
overload is what I
Yeah.
call it. It's smoothie.
Yeah. So just to show you, explain what a bridging loan is. A bridging loan really is bridging the gap between your normal loan, which would be
Yeah.
your mortgage, and when would you use it? It's usually used when you go to an auction and you bid on a property and you got told you've got 28 days to complete the whole contract, otherwise you get penalised heavily. So
And why did they do that? Just as we're talking about, and I think it would be good for us to do an episode on auctions and
Yeah,
go to an
auction.
auction and things like
Yeah.
that. But why an auction do you have to complete in 28 days? Why have they put that stipulation? Because it seems like it makes everything that little bit more stressful.
it is stressful.
Yeah.
I went to
Why
an
do they
auction.
do
I
that?
bought my property from an auction.
Yeah.
First time I've done it. You stand there, you wait for yours to come up, you get butterflies, your heart beats racing, you bid,
Yeah.
and it goes quiet, and you think, yeah, I've got it. And then somebody outbids you, and then you have to stop and think, how far are you prepared to go? You have to work with your head, not your heart at auctions.
I think that's a great point that you make in all properties.
Yeah.
All properties, regardless of what you're doing, this is not an emotional buy.
Yeah.
This is a head buy.
Yeah.
Does it stack up?
What I'd say to you is, if you're going into buy to lets, we can provide you with spreadsheets on how to look at a deal.
Yeah.
And work out, is it worth it, right? And at what price do you not pay? Because then it doesn't become worth it.
Yeah.
So,
we were talking about some things that you looked at this morning, and this is going to be a downloadable. So if you go to the downloadables, for a couple of pounds, you can download our return on investment document.
Yeah, it's a spreadsheet.
Yeah.
It's a deal analyzer. It'll analyse the deal. It will tell
Sounds
you.
so sophisticated, Dave. It's a deal
I know.
analyzer.
Hey, look,
I like
we're
it.
talking to people who are going to become sophisticated with our help. So we might as well use the language that
100%.
we all the industry uses.
Yeah.
Deal analyzer. All you're doing is putting in what you pay, what mortgage, what deposit you've got to do, all your costs. It'll tell you how much you're going to put in, and then you work out. And we'll go through later on the thing how to work out what your rent is worth.
Yeah.
Right. And then you work out, is it a good deal or not? From that, if it's an auction one, you can look at it, you can do the viewing, and then you can work out how much it's worth to you as a deal.
Yeah.
You go to the auction, and if you get it, you have to complete very quick. So one of the ways to do it is a bridging loan. There's usually
so that was the thing. Go back, sorry, because that was my own thing. I took you down a different route. Why 28 days? Why in an auction do you have to complete 28 days? Why did I do that?
You've got people like Purple Brick who say we'll sell your house and no commission and everything else, right? On an auction, to get properties in auction, they come in either because they're not very good, they need work, or
a lot of work.
Yeah. Or people want a quick sale. In other words, because in an auction, when that hammer goes down, that property is sold. There's no, I'll think about it, give me a week, it's sold. I'll pull out. You can't pull out.
Yeah.
Once it's gone down, you're committed. Right? And the thing to do is, before the auction, you get in touch with the bridging company, you get a decision in principle, so you know you've got a loan, and at the same time, speak to your mortgage broker. But we'll cover your mortgage broker later on in another video. We'll talk about it and how to use him to the best advantage.
Yeah.
So with the bridging loan, there's two sorts. You can have a step one. The one I chose was 0.49% per month for 6 months, and then 1.49 for another 6 months. But you can have them for 2 years, you can have them for 3 years.
So it is an expensive option. Just saying that, the APR, and the interest on a bridging loan
is high.
Is a lot higher. So it's not meant to be a long-term
Never,
solution.
I would never recommend it long-term.
Yeah.
You have a high fee. Mine was £1,400 just to have the loan, but there was no exit fee, so I could have got out of that mortgage anytime within 6 months.
Okay.
You have to look at those sort of things. It's not a case of it's a loan, it says it's for 6 months or 12 months. The case is you've got to get out quick because it mounts up.
So ideally, what are we looking at? Usually a bridging loan then is something you take out for maybe
a month, 2 months.
To 2 months, 3 months. Or if you've got a property, so you mentioned obviously an auction, but if you see a property in the market that has extensive work, and then sometimes mortgage companies won't loan on it because it's in a state of disrepair. That's a great time to...
A mortgage company to lend you, it has to be classed as habitable.
Yeah.
So it must have a bath, a sink, kitchen. That's habitable.
If it doesn't have those things?
Not habitable, they won't lend on it. So you go to, those sort of properties will go to an auction.
Yeah.
And you'll either find people there who are cash buyers, or they'll have a bridging loan in place. The bridging loan will give them 6 months to get the work done, then you can go for a mortgage. There are bridging loan companies who will do a bridge to mortgage, but that's another one. It's basically the same. The bridging company will lend you the money, and then they'll do a mortgage afterwards.
Yeah. Is there lots of bridging companies out there?
There's more than you would think.
Yeah.
There is a big market out there because there's lots of different types of properties. They all have their own idiosyncrasies, their own problems, and that. Mine was the property I bought was from a landlord. Didn't want to do it anymore. They got tired of it. They were old.
And some bridging companies as well. Just on that, David, that I've known personally, I know some individuals who actually do bridging. Basically, what it is, sometimes there's high net worth individuals who are sitting on lots and lots of cash,
but can't release it quickly.
But they can't release. So what they'll do is, instead of buying, they don't want to buy any more properties. They'll say, actually, we become the bank. So a lot of bridging companies are individuals who have just got lots of cash, and want to act like a bank
Yeah.
and make a better return than
Yeah.
they could actually invest in properties.
Yeah,
So
they're called cash investors.
Yeah.
They're not regulated, so you have to be aware of that. You know, a lot of them have got good intentions and are honourable.
Yeah.
But you can find some people who suddenly say, "I want my money back. I have now got a crisis. Want that money back." So, I would always recommend sticking with tried and traditional. People are regulated, so if there's a problem, you have redress.
Yeah.
Yeah. As you get more sophisticated, we can go to cash investors and borrow the money. You know, they're joint venture partners, investors, property angels. You know, you can get that. They'll charge 10-12% for the loan. You can also find people, like Denzil said, who have got cash, and they'll be quite happy with a 5% return compared to the bank's 0.5%. You know,
And that may be family members.
Yeah.
You know, when we talk about sourcing, you know, we've talked about banking, and obviously
Yeah.
we're talking about bridging, but you may know family members who, you know, have 10,000 now. You know, how much is your property? Maybe it's a £70,000 purchase. You know,
Yeah.
you're buying one of the ones that we sell from up north.
Yeah.
Okay. How many people that may be 4 people in your own family
Yeah.
that you could finance through and come up
And
with
give them a
financial
return.
model. Yeah.
You're less likely to find a problem with your family, and your family is less likely to find a problem with you because you're blood related and everything else. Let's
Or
face
it might be worse.
yeah, but
joking,
let's
not
put it this way: they will know you better.
yeah. They didn't really know you. That's it.
So, no, family is a good way of raising funds.
Yeah.
You may have a dad, you may have a granddad who's got money, but doesn't want to lose the money because he wants a return on it.
Yeah.
So offer him 5, 6, 7%. He'll lend you the money. You pay him back. You know, get the property, do the work, do it up, get it mortgaged. If you're buying a property, you can't really remortgage a property within the first 6 months.
6 months. Yeah.
So you keep it for 6 months, you're paying them. So if you work it out, he lends you 1,000 at 6%. 6 months, you've only paid him like half of that. About
Perfect.
3%. So it's a good way of doing it. If you've got family involved, you've got support. If you need work doing, you may have a willing workforce.
Yeah. You may just get the money back out.
Yeah. So yeah, but bridging,
Yeah.
is a specialist subject. It lasts anything up to 3 years, and it is really only for auctions or special properties that have to be a cash buyer, because it's got a short lease. A lot of flats have short leases. You can pick them up cheap, but it's going to cost you maybe £30,000 to renew the lease, and you've got to keep it for a period of time. So
Look at
there is finance there for different situations.
Yeah.
That's where a good mortgage broker comes in. He doesn't just do mortgages, he'll do probably bridging, or no, specialists who deal with it. Yeah. Other ways you can raise money, but you do need specialist advice, and they do need a solicitor. You can do equity release. You know, there's lifetime mortgages out there now for your parents.
Yeah.
You know, they just pay the interest for the rest of their life. You know, there is different ways.
So there's loads of, and there are some more creative ways, and we don't actually really promote them through GenInvest, but obviously Dave, Property Connect, can introduce you to.
I can introduce.
To more
they're all
specialists.
specialists. They're all qualified in that
Yeah.
field. But if you're starting out, I would start out with just a basic buy-to-let mortgage.
Yeah.
Get comfortable with being a landlord. We will have downloads and things you can purchase to help you be a landlord. What you need to know as a landlord, the rules, the regulations. New ones that's come in is homes for habitable conditions. Now, for the first time, it's not just for landlords. It's social housing, charities. Everybody's going to be covered by this. So for once, it's one rule for all.
Fantastic.
But we can give you details on that. I would say if you're interested in it, contact us. Give us your details, and we'll have a quick chat with you, work out where you're going, and see where we can help you.
Fantastic. Now, thank you for that. So obviously we've covered, you know, where you can get mortgages from, your building society, your banks, you've got mortgage brokers, you know, and you can find your mortgage broker, as you said, you know, in your
local
local estate agencies,
yeah.
and then you've got bridging. So the thing is, there's different ways to finance a deal. What I would say is keep it simple. You know, bridging is once again one step more complicated than a traditional buy-to-let.
I would say it's two more steps, because you've got the pressure, you bought it at an auction, you've got 28 days, and it's not that simple once you come out of the bridging. You've got to go into a mortgage, so you're doing it twice. So I would only do this if you find something that's dirt cheap, that's going to be really, really valuable when you've done it.
100%. So, as Dave said earlier, try and stick with something simple for your first one. If it's the first time you're doing it, or maybe even the second time, stick with something that's simple, get your confidence and build up. You know, in anything in life, you take baby steps, you know, then you learn to run. Don't run before you can walk. So look, you know, the great thing is, you know, we're bringing these videos out every Monday. Now, one of the things that we'd like to do, obviously, we've got free downloadables, so you can go onto the website. So if you go onto the website, details are at the bottom and you'll see them on the screen, but also obviously in the monologue underneath. But I want to give them something, Dave. I want to give them a freebie. For the first person who comments or comes back to us via email, what if we give them a free half an hour coaching?
One-to-one?
One-to-one.
Yep.
Yeah, okay, so Dave, who is a property guru, that's it, look, you can see by the silver hair, he's a property guru, okay, we're going to give you a free, for the first person to comment or the first person to email us, we're going to give you a free half an hour consultation. You can ask us anything to do with properties and it's going to be a tailored answer to you. So that's our giveaway, okay? Now you know, if you imagine what's the worth of that, like we don't charge, okay, within the GenHope company for an hour's time, you're talking about £100. So we're giving you a value of £100 for free, okay? And you can take notes and everything, and you'll have contact with Dave. If Dave's super busy, okay, you'll also have me. So I've got over 12 years of investing experience as well. So you'll have access, and you may even get both of us on a call. Yeah. If you're really lucky.
If you're really lucky, we'll both be there.
Yep.
Because we've got different viewpoints.
100%.
He's more from buying loads and loads, me from looking after loads and loads.
Yep.
And selling some, and doing mortgages. So you get the best of both worlds.
Excellent.
Yeah, and you should be able to feel confident. If you're not feeling confident, we can probably put something together for you where we can hold your hand.
Perfect.
Walk you through it. But that's something we'd have to discuss because that is time consuming and we haven't really costed it. We only spoke about it just before the coffee come.
Just having ideas. We're always having ideas. How can we bring more value
How can
to
we
our
help
viewers?
you become more independently financially? That's what we're looking at doing. Making it so that you control more in your life instead of being controlled.
Excellent. All right, so make sure you subscribe. Okay, we can find us on iTunes, SoundCloud, and also this video, obviously on GenHope TV. So please subscribe so you get these videos every week. So every Monday, make sure you tune in. This guy's going to drop you nuggets so you can move away from being a consumer to becoming an investor and set up your financial freedom, or maybe even become financially wealthy. Who knows?
That's the hope for everybody.
That's it. See you soon. Bye bye.
Goodbye.